evening, all. Ira Epstein with your SPDR ETF wrap-up for the weekend of Friday, and this is the 4th of February, 2022. What a week, right? So we saw Facebook literally fall out of bed this week, over a $200 billion market cap hit, and we saw Amazon today explode. If you take a look, the market opened, it didn't go that crazy today. It opened $31.12, it closed $40 higher. So in terms of that, it had been a lot higher than that. It gave back some of it as profit taking and so on was setting in later in the day. You've got Apple that had stellar performance, but I'm not convinced that at the 170 level right now, traders are reaching for that market. The events of the week, well, we certainly saw jobs data today shake the market. And what's bothering me about it, and I must say this and criticize the government on it, how could you have, out of 12 months, 4-month major revisions during that time? I'm not talking that they made a change. Hey, instead of a 100,000 gain, we got 120. I'm saying instead of a loss of 50,000, we really had 450,000. That's what they're doing. So how do you use those numbers to really know that even what we got today is right? That's the point that I don't know. I was watching Steve Leisman today when the numbers came out, and he was alluding to the same thing. He's much more of a gentleman than I am. And he was saying, you know, he had his doubts back when those crazy numbers were coming out on the downside, and he said with today's numbers, how could that be such a big... He did his best, and I truly respect him. And that's what he did. And I've got TVs everywhere, so I'm watching Bloomberg at the same time and what they're all saying. But you got to go with what the market is saying, okay? That's the data you have, and that's what you trade off of. The government people should be fired or find a better system, a better way of conducting these numbers so that the variances on fixes are much more minor. Take that as a friendly thing. I think that everybody that works in that department wouldn't disagree with me. I'm not knocking your methods. I'm knocking the methodology. Is that a difference? I'm sure you do your job right, but whatever you're using is wrong. That's the point that I'm saying. Then we look at where we're at now in the European Central Bank, the Bank of England. Everybody's joining the U.S. and raising rates. So us raising rates doesn't have the fanfare that it did. Then we see the market, what's the next big crowded trade happening? The big crowded trade that is now happening are the bets that the Fed's going to keep raising rates. Now they got it up to 6 times. If you look at Fed fund futures today, they were at, I didn't look at them at the very end. There's now a 34% chance in February of next year there's going to be a rate hike. That wasn't even on the board just before then. So now they've carried you into there, and every month has a high probability, with the next 2 months having, as of today, 100% probability of rate hikes. How much? That'll be debated. Why did the Fed, with all this, have to continue all this bond buying and continue to do it until March is beyond me. They didn't have to do that. Balance sheet shrinkage. Nobody knows what that means, but the Fed said it's not going to be their main tool, so that's where we're at. So now you put it all together and you go, whew. The one thing we can see is COVID is coming to an end. And just where the scientists said, we're at the beginning of February in Chicago, they're talking now for the restaurants, how do they remove the mask mandates and all the other things they've got in. The school system today, looks like the masks are going to be able to come off. And in other parts of the country, you're seeing that it's lightening up. That doesn't mean there won't be another wave. We don't know what will happen. But for this part, the peak has been seen. You're at the other side of the slope now. And the question is, what next? Plus, we're already in the flu season. So I just question all that. And jobs. Now you're getting a lot of jobs. What's that going to mean? So we take a look, and obviously Facebook has serious issues, all right? For the first time, they're losing subscribers. Maybe this particular vehicle has had its day in the sun. And that's what you're seeing. The traders dump out of it. You got TikTok, you got the other vehicles. It's like everything else. Anything to do with technology has a beginning, a middle, and an end. Certainly you're in the middle. You're not at the beginning. When we look at what the chart did, The trend is down. It came out of left field, obviously. Let's remove this week. You weren't in an uptrend. If you think that's an uptrend, I'm lost. You have a higher high, lower low. Market came up, and when it fell apart later in the week, you'd already made the higher high. Here's your outside week down. So until this high is taken out of 328, you've got a market that is in a liquidation mode. That's the way to look at it. But where's the support? There's always support. You slid through the 100-day as though it never existed on the chart. But all of a sudden it went to the 200 and that long-term moving average. It didn't just happen. Traders were looking at it and they said those that were short possibly there and those that want to get long possibly say, you know, I've seen this story before. They're always killing off a big company, Caterpillar, GM, whatever it is. They come back and they find a way to reinvent. Maybe that's the thinking that went on there. When you look at the Bollinger Band, you're way under it. You now have this week under it. Last week you finished at 301.71, and that was under the Bollinger Band. And the week before, you got 3 weeks under it. You rarely go beyond 5. So that tells me getting to the point where wherever the number is, it's not that far away. That's my attitude on it. You're getting momentum down, bias down, hitting some support. Then I'm wondering what's going on with the banks. Why aren't they doing better as a group? And I think part of the problem is they're trying to figure out the curve yield. How do they lend at one number, right? They take in the money and then they want to get it and make the spread. Problem is the curve yield is narrowing in so much, it's taking away the juice. And that's why this market's sort of stuck. But for the moment on a weekly chart, as far as I'm concerned, you had this arrow, you get rid of it now. You actually have higher lows and a higher high at that point. I think the pros are buying right now. Right here, and I think their stop's under 53.20, and I think they're hoping that the market will get back up to the upper Bollinger Band. That's the longer-term trade I'm seeing there. In the industrial sector, we have come down to the point where it's hard to stay under a Bollinger Band unless the whole economy's about to fall apart, and then you say, hey, all of this action is a big top, and you're going to fall apart. I'm not buying into that argument. So I'm more inclined to think that the market is trying to find its legs against the lower band. We're not trending. You have a higher high, lower low. Take out this week's low, then you've got lower highs and a lower low, but that's going to be the key. Where's the resistance? 103.80. So you'd have to close under the Bollinger Band again to push the market, and then you're setting up a problem in it, okay? Then I'm be saying, hey, till you get back over here, you got to join the bear camp. Not quite there. On the energy sector, this is a crowded trade. Who isn't bullish and who's not saying $100 a barrel? That's when you get crowded. It's like who's saying that 6 interest rate hikes? You get what I'm saying? You're over the Bollinger Band. I'll let somebody else own it. On the futures, if you get my morning subscribers, I've been telling people buy here, where to flip it out, been doing that right along. But I'm not able to put it in the writing update. I have to do it in the video one because it's happening like that as I'm putting out the updates. And they are timely updates. Still in an uptrend, fully. So on the pullbacks, I think the pros are going to keep buying. I think they'll buy until the red line closes back under 79. In SPY, you've defined the trading range, the upper to lower band. That's what it's done. What's the neutral number? Look at the 18-week average. For those of you that watch me regularly, what do I say is the line in the sand, the neutral number on a chart that markets like to go to figure out what to do next? It's the 18-week average of closes. Duh, it's right there. That's what we're trying to do, figure out now. Emerging markets. The emerging markets are suddenly acting better. I know they got hit here and I know they failed at the 18-week, but they are paying very good attention to the 100-week and the lower Bollinger Band. Now, if you get back and close under them and start riding the band, I'll throw out what I just said instantly, because if you take out this week's low of 47.84 and stay under that 100-week, you'll have a downtrend with your band. You start riding the momentum down, and you're probably going back to the 200. Let's flip-flop it. Market rallies here, more resistance at the 18-week, but it's saying that it can hold that number. You're not in a trade setup, but it gets interesting. Gold, how disappointing. What other story do we need to make gold move? You got labor inflation at 7%. Prime just raised its price nearly 20. The market's not even balking at it. They're congratulating the stock, driving it sharply higher, going, great job, guys, great job. You're proving your pricing power. We have the Ukrainian situation where, thank you, Germany. Do you know what Germany is doing for the Ukrainians? And this is stuff you can't make up. Other countries are sending armaments, selling whatever they need. Germany today offered, in the way of military armaments, helmets. 5,000 helmets. This is wonderful. You can't make this up. I read it and I'm cracking. What they're really saying is, Germany is for Germany. They'll do what they have to keep that Russian gas coming in. Russia sees that, and it says, okay, the powerhouse there is not going to do anything against me. So now the question is, what do I do with the rest of Europe? They don't want to put troops there anyways. So I'll go on to China. I'll meet with President Xi. Lo and behold, I've got all this natural gas that I can't give to Europe. He's been reversing the flow, but I'm going to give you, China. We'll build a pipeline and we'll deliver it to you. And by the way, let's put out a joint statement on NATO. Forget the politics. This is real world, folks. This is not Ira making this stuff up. I laugh at it because it's like a Bill Mayer thing, who's the best on TV. You know, you gotta love it. In any case, it's trying. It needs to clear that high. Going home, is there a trend? Unfortunately, no. If you look at my metal video today, I show you what's going on there. When you get to the gold miners, you're caught between a higher high, lower low. It is certainly not trending. When you look at ARK, she can talk all she wants about how good it's going to be. The market is telling you how good her stock is. It's terrible. You're in an embedded reading. It's still coming down. When the red number closes over 21, I'll have a different opinion. You just had a bearish crossover. There is nothing on this chart that looks any good. It was 160. I admit it has come back. It's back up to 72 off the $64 low. But it's still not good. And yet new money's flowing in. People love her ideas for the future, and so do I. That's the funny thing. But as a chartist, I can't invest in her fund. Amazon, lower highs, lower lows. You got under the Bollinger Band, pop-up signal. You got pricing power like that? Unbelievable. But has the chart turned bullish on this? No. It is still bearish. You get up here, the pros are going to sell it, I think. That's your bounce. It never did embed. So I realize what people do. I get caught up with it. But as a chartist, I take the name off the chart. And I want you to learn to do that, okay? Learn to take the name off the chart. Would you buy or sell it? I defy you to do that. Everything's going to change on your charting method. You're going to realize how good you possibly are. Because you're trading the emotion of Amazon with the pricing, you're really not trading the chart pattern. Big difference. By the way, the pattern was telling you not to be short back here. All you've done is come back to it. When we take a look at Apple, Apple has not thrown out a bull signal. It held a break low. There's a big difference between the two. You had a contra trend break. Why contra? When you're over the 18-week average, the bias is up. When you get a sell signal, that's contra. The two fight each other. You went back to that line in the sand to figure out what to do next. Tesla has been in a downtrend. Lower highs, lower lows. It is not a $1,200 stock. It is a stock that is now $900. It has lost a chunk of money. People don't think about that. You know what they think? It's Tesla. It's going to have resistance, at least in my opinion, at the 1,000 level. I don't like how broad the chart is. How do you go short at 1,000 and put a stop 20% higher? I certainly couldn't do something like that. Then we come to TLT. This is what I call the crowded trade. It is certainly bearish. Let's start with that. The market is now fighting between the 200-day average and the lower Bollinger Band. That's typically where support is uncovered and where short covering takes place. This market has been in a bear play. You tell me that that's not lower highs, lower lows, and then you fell into the Bollinger Band. That's where the pros started taking, in my opinion, money off the table. I know you're going to say, well, it's drifting down even lower. It's not about catching the lowest low, the whatever. You're in a zone where profit taking is taking place. That's my argument, and you're back down this week there because of all these numbers, especially today's numbers on the payroll. But do I think pros are selling fresh down there? I don't. Do I think they'll sell rallies? Yes. But I don't think they're doing it there. I think they want to see how the 200-day holds, and they'll make up their mind what to do. You know that in the mornings, I start you off at 5:30 with all the futures talk, and then at 9 o'clock, I carry you right into the SPDR ETF and the stocks. This is only for my subscribers. And I realize if you're watching me here, you're probably a YouTube subscriber, but I'm talking the subscribers that do this on my website and get into the members area that we have there. It's simple to find out about it. All you do is go to our website at www.IraEpstein.com and just go to the research area. Everything is explained. And if you want to learn my charting techniques, go to the education area right next to it. Everything is explained there. But the point of all this is trying to make sense out of the chart action. And one of the secrets I just gave you, take your name off the chart, whatever that is, and tell me that you'd feel the same way about that pattern. Leave the prices on the side so you can measure dollar risk, but don't know what it is. If you can do that, you're going to take yourself to another level of charting. Because as a chartist, you're not supposed to be a fundamentalist. You're supposed to be a chartist, reading the tea leaves, what's on the chart. I'm Ira Epstein. You have a great weekend. I'll see you all Monday.